Money is what everything's about nowadays. It's what the stock market's about. It's what high-frequency trading is about. But what exactly is high-frequency trading?
You look on TV and you see the guys in the coats and running around the stock exchange. That's just for TV. Most trading is done by computers now, and it's done by high-speed computers with guys who are getting certain information to take advantage of other people.
High-frequency trading is the evolution of day trading, and day trading is making a lot of trades in a short period of time, just trying to make whatever money possible. High-frequency trading is thousands of trades per second, so it's computerized day trading.
Well, high-frequency trading has really taken off in recent years, especially after the year, I would say, 2007, although I've seen it as far back as the mid-1990s. Right now, it's said to be 70% of the trades and 60 to 70% of the United States volume in the stock market. So 7 out of every 10 trades that takes place is not done by a human, it's not done by a broker, it's not done by someone who's picking a stock because they think it's going to go up or go down. It's done by a computer who's thinking and executing trades in milliseconds, and yes, that is thousandths of a second, and microseconds, which is millions of a second, and it's doing this all day long, in and out, in and out, in and out, millions of shares a day.
But that's not all that there is to high-frequency trading. First of all, there are different types of high-frequency trading. There are many, 3 of which are rebate trading, statistical arbitrage, and most unfairly, predatory trading. Predatory trading is a computer watching over your orders, stepping in front of you, buying all the available stock, and selling it back to you at a higher price.
It's becoming quickly a group of insiders with massive technology and speed versus the rest of us.
Seems unfair, doesn't it? You'd think someone would be trying to stop it or do something about it, right?
No. You're seeing a lot of circling the wagons, and especially after the May 6th flash crash, they're calling it, a lot of people are asking a lot of questions now, but nothing yet.
Now, who can high-frequency trade, and who are the high-frequency traders?
If you ask the high-frequency traders, they'll say anybody, but you need a lot of money. So you have now brokers and hedge funds who have a lot of money to deploy for computers and systems and so on, so it's not as easy to get into as you think.
So what exactly is bad about high-frequency trading? Well, so far we know that predatory trading is unfair to the investor. But what else? Well, you remember the May 6th stock crash, where the stock market dropped 900 points? People are saying it was caused by fat finger trading. Someone hit the wrong button. Well, that could have been a cause, but why did it jump so low? Well, there were no humans to realize that this was a mistake. There were only computers to just make the decision to sell. What can a regular person do about high-frequency trading, though?
They could limit some of the information that's being given to them. They could enact certain fees on some people if they're stressing the system too much. But the problem with the regulators is they don't quite understand it.
So they don't understand it. That's a big problem. I've taken some polls to find out how much people know. First, I found out that about half the people I polled are invested in the stock market. I also asked them if they understand it and what they know about it. Now the graph is divided up into about thirds. That means that basically 2/3 of people don't understand high-frequency trading. Then I wanted to find out people's opinion on predatory trading, so I asked them what they thought, and most people agree that it's unfair. Now there's been a lot of hype about high-frequency trading recently.
High-frequency trading.
That's the world of high-frequency trading.
High-speed trading. High-frequency trading.
And even some comedic hype.
If I know about a stock's activity a day before, it's called insider trading. But if I know about a stock's activity 1 second before, it's high-frequency trading.
Some of it may be insider trading, and it's really not up to me to decide.
But in the 4 minutes you just spent watching this, high-frequency traders bought and sold roughly 33 million shares and extracted tons of money from the market, all while creating zero value.
Now what will high-frequency traders tell you?
First of all, there's nothing new about high-frequency trading. You do high-frequency trades. We're just introducing computers into the market.
Anybody can high-frequency trade.
Computers shouldn't be blamed for the whole thing. They should be blamed for the path. They should be blamed for the path, how it played out.
So there's nothing new about it. It's just introducing computers to the market. And as we told you before, they'll tell you that anybody can do it. So I'm just about done. But what do you need to remember? You need to remember that high-frequency trading is computers making lots of trades in a short period of time, the evolution of day trading. You need to remember that some parts of high-frequency trading are unfair, like predatory trading. You need to remember that high-frequency trading is replacing a lot of human traders. What can you do about it? You can limit the amount of information that you're showing. You could get educated more about high-frequency trading. The government really hasn't taken much action on it, so you could push for them to take some action. Thanks for watching.
Money, it's a guy.